the price drops out of again from here. Whatever, it doesn't make any difference. But the point is, what if there's a buyer still in this market? If I look at that and say, right, the value is dropping and I decide to go short here, I'm just immediately underwater here, immediately under a lot of stress on this deal. Well, the value is good. We could argue that this is dispersion, selling coming in now. Dispersion traders are going to sell, but they're selling to an active buyer in here. So what we've intuitively done, I hope it is intuitive for most people, what we've done is we've put in a blue line when we see a buyer at that price. It's a shaded blue line area. And what it basically tells you is you cannot buy it, sell at this price if there's a buyer at this price. So what happens is it then draws a black line on your screens at a higher price point to remind you that if you're going to sell it, you've got to sell it away from the current price. So you don't ever sell that price with the value dropping. So the idea behind this as a principle is that, of course, that the trade goes up and it's now starting to create enough distance between you and the buyer that allows you to now get the short sell onto the deal at that higher price point. Does that make sense? So if you want to see it, obviously in reality, we took a couple of screenshots from yesterday after we'd finished off the story. And in reality, this is exactly what we're talking about here. So you can see we get a buy trade here, right? We get an MXVB trade, right? A buy trade at the bottom edges, but you can see there's a seller in here. And because there's a seller here, we want to get below that black line area if we can to make sure there's enough distance to make at least our first $100 out of the deal. So obviously, because there was a buyer here, the possibility was you would have bought towards the high of that candle. Well, you know with that red line there that the chances are that this is not going to be the trade yet. I mean, there's always a chance that this buy might be running into a capper or a heavy seller here, and we might end up substantially lower before the buy kicks in again. Obviously, when we break that seller, that's always a great sign. So this becomes a possible safe trade location, and that might be a new way of looking at the market as well, is that we've got buy side value, we've broken the last seller, the market kicks on from that, and then we get this beautiful retest for an easy money buy trade. That looks quite an interesting trade, doesn't it? Looks quite an interesting trade at that point. When we look at another example here, you'll see that we get a buyer coming in here. And of course, that means that they sell at the higher price is a bit dangerous. Now, it depends how far away you are from the blue line. If you've still got enough room to make your $100, you can still take the shot. But the one thing I don't want to do is I don't want to be selling into that buyer. Now, the good news is when we clear the buyer, you can see we get this brilliant retest for what it turns into a great sell opportunity. You see it? This seems to happen all the time with these triggers. That's the exciting thing about it, is that you get another shot at making even more money with the same sell side narrative. Another example of it is here. You can see this trade here. You can see that there was a buyer coming in here. So if we're going to sell this, we want to make sure we're getting a distance away. Now, if we don't get a distance away, we need to make sure we clear that buyer before we get short. And then the price goes. You see the storyline? So it's an idea. I hope it's a good idea. I think it should be a good idea. Theoretically, it should be a good idea. It's identifying that there's too much buying pressure, and you can see it pins and it pins and it pins. So you're starting to get an impression that we're quite right about that storyline. So obviously, when that buyer disappears, the value kicks in and we get the big sweep. Sometimes we don't get the big sweep. Sometimes it actually doesn't break sell side and we get a pop to the next key support level or resistance level. And that's something you can recognize from the bigger picture chart I showed later on. Yeah, here it is here. So this is the bigger picture here. So you can see how good this as a storyline really is. So there was a straightforward buy trade. There's no sell pressure coming in. It's a straightforward buy trade. Price goes straight up almost immediately. These sell trades, however, have buyers at this price here. Do you see that? So because these sells have buyers at these price areas, I want to get above the black line to sell it. I want to get above the black line to sell it. So you can see we get above the black line, we get short and we make some money, but the buyer stays in place here. You see that? The buyer stayed in play here. They rejected the low price. They came back into the buy side. You're thinking, right, we're going to clear that to the upside. And then a buyer came in here. What the hell is even that, right? So obviously we'd have to get a good distance away from this now, because that's now a failed auction. So we've got to get a good distance away from this. And obviously we got the sell in. We made our money. But again, we've been kept safe by recognizing that there was a buyer in place there. So when that sell gets taken out, we go to the next higher price. That would be a good idea to think about that as a possible sell trade, whether we get a trigger or not. The idea is that we've got a sell narrative in the background. So we should be able to make that trade at those higher commercial levels. And very similar thing happened here. We got a buy value coming in, but we had a seller right above us. And because we'd buy value with a seller right above us, we need to get below that black line. We got below the black line, we got the buy trade on, and then we hit the seller again, and they came straight back in again. And because they came straight back in, we're thinking they're going to sweep this to the next commercial level, which was down here. And obviously they swept to the next commercial level, and we got a buy bounce off the next commercial level. So intuitively, I don't think in the past, I don't think there's ever been an indicator like this that gives us, you know, the buy pressure and the sell pressure at the same time as we're getting the trade signal. And I think it just helps to give us a better feeling about, you know, we tried to achieve that with the max spectrometer. And if we're trying to achieve it with the max spectrometer, of course, what we see is we see that market maker narrative. So it has that same core concept as the market maker narrative on the spectrometer story. It has that same core concept, but obviously you're not bombarded with information points at that stage. It's just a simple, clean blue or red line that's attached to our charts, which gives us a clean representation only at the time of trying to make a decision, instead of having lines running up and down and back to front on every candle, on every swing. It's only when we're trying to make a value decision does it tell us, well, wait a second, I know you're wanting to be short, but there's a buyer right below you. I know you want to be long in here, but there's a seller right above you, and you've got to pay attention to that guy. There's always a very good chance that they're going to run it through. There's always a very good chance that they're going to run that through as well. And when they do run it through, you can still be looking for that buy trade reversal. So I think it's quite intuitive. I think it has an idea behind it. I think it's got a good idea behind it. Time will tell, but let's see how it does today in terms of the data. We'll wait until the market is underway, and then we'll be able to take a goosey gander at it. Sell side value in oil. Remember, we closed out our positions at 82.11s. Did anybody resell that commercial sell level? I'm assuming everybody's got the commercial sell level in oil. Can I get a hooyah gentleman for that commercial sell level? So did everybody find a way into it? Value was bear. Remember, we're trying to be sell side oil today. We told you that earlier. Macro sells down to 81.5, 81 evens. And of course, it's just about making sure your charts are up to date. So there's the commercial sell zone. Did everybody have the same price level? So there's the buyer. There's the toxic sell coming in. There's your commercial sell zone right there. So obviously, when we saw the value diverging in here, you're obviously very aware of the fact that that's coming up to that price level. And obviously rejecting against that, we're obviously looking for that voltic. Did anybody see the voltic? It was crystal clear, wasn't it? And again, this is tying the tools together. This is tying elements. Look, take a look at the order flow. What the hell is even that there? It's a voltic, isn't it? It's the arrival of a big commercial trade order. No shit, Sherlock. It's probably all of you guys getting your short on it. So obviously what you're supposed to do in that situation there is simply put your sell stop order in below it and wait for the price to come off the Baltic. As soon as that Baltic is on your charts, it doesn't go away. Get the sell into the Baltic at 1 tick below it, 2 ticks below it, and run the trade sell side. You've just went 25s to 80s, $450 per contract on that short sell. And again, value-wise, looks tasty. Looks tasty, doesn't it? So looking at the narrative in terms of your volume, your swap dealers, there's the problem. Okay, the short-term swap has a little bit of bullishness about it. Now, the macro is bearish, big style, right? So we're not madly bothered about it. We've got this very bearish macro on oil. And because of that very bearish macro, we're not exactly screaming about this short value turning around a little bit. Yeah, is there anybody that thinks that's bullish at the moment? No, of course not. So we've got this very bearish value. We talked about it this morning. We talked about that commercial sell coming in at these price levels in here and in this phase here. And from that commercial sell, of course, we are targeting the price point of 81.50, 81 evens. So we're trying to be sell side. So that short-term pop here just means that we just have to give it a bit of space and then sell it at higher prices. And that's why we've been waiting for that higher price point to generate that short. Nice. Very nice, guys. Very nice indeed.